समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The festival season is upon us, so we have to be talking about gold, but not in the manner that you might think, because we know that soon enough, come Puja time, Dashera, then Diwali, Dhanteras, Indians, we know, are always buying gold, but this is a very special time. This also within the Indian gold buying season lies a larger story, and that larger story is that this is the peak season for buying gold, not just for Indian individuals, the Chinese as well, but this is for the big sovereign central banks. Individuals might buy gold in 10 grams, 100 grams, maybe half a kilo, something like that, if it's a wedding, or maybe even more if it's a mega wedding. But there are the big guys, the really big guys who buy gold in bulk, in large amounts, in tons or tens of tons. And think of who's buying. It's the central banks or reserve bank equivalents representing sovereign nations across the world that are buying gold. And they are buying gold as if it's going out of fashion. Now, this is a phenomenon that we had taken notice of almost 3 years ago in episode 1210, of which I will share a link with you. That is when we said that it was mainly pushed by COVID first, and then also by war in Ukraine, which had just started, and that countries had started buying gold. Reserve banks were buying because gold is a hedge. You don't know where the markets are going or where the currencies are going. Gold is when you are in panic, you don't know what to do, you go and buy gold because gold stays with you. You can keep it in a vault. If you think the vault is going to be invaded or maybe raided, you can dig 50 feet deep and hide your gold there, as families, countries have done throughout history, throughout centuries and generations, throughout millennia. So gold is a physical asset and you sort of feel safe with it. It's a currency of last resort. If you look at central banks that are buying gold, see what's happening with central banks that are accumulating. In 2020, the share of gold in central banks holdings, 2020 is COVID year, right? So that's a landmark. In 2020, the share of gold in central banks holdings in the beginning of 2020, see this graphic. This is the share of gold in central banks holding was less than 10%, say about 9.5%. Today is 13.5% over the base. It's a humongous amount. The 4% shift in global holdings is a phenomenal amount, and I will explain to you how. Because if you see a gold split, and we take it from this global investment research, Gold in a Fragmented World, that is the headline, safe haven and strategic asset from FTSE Russell. It's a research firm, it's a part of LSEG group. They tell you of the trend, and see this graphic, which we are borrowing from them, taking from them, and thanks to them. So thank you very much, LSEG. This tells us how important countries' gold reserves have changed over time, over this relevant time. So Asia, if you see all of Asia, most of it's actually India and China, or China and India in that order, because China buys a lot more. Its gold reserves are about 3 times as high as India's. Turkey you can add to Europe or Asia. I don't know where this group has added that, but that's another major buyer. If you see then, all of Asia's gold reserves between 2020 and 2024 have gone up 18%. That's a lot, 18%. In Europe, it's only 3%. Africa, South America, 19% and 18% respectively. North America, so basically all the countries that don't have either a reserve currency or some equivalent of a reserve currency. Reserve currency is the dollar. Some equivalent of the reserve currency are other convertibles, that is the UK pound, or the euro. Besides those, everybody's been accumulating gold. North America, that's why it has 0% because they have the ultimate reserve currency. Oceania, once again, Australia, New Zealand, 0%. If you add it all up, the net growth in gold as a percentage of reserve bank assets is 4%. That load is lightened mainly because, say, the US, Canada, Australia, Europe, the big economies have added nearly zero by way of percentage. Europe, in fact, has 3%, 3%, which is negligible. So that large base is missing from this calculation. So the 4% overall growth is accounted for by the rest, that is Asia, South America, and Africa. Again, Africa does not have so many big economies. South America also has its limitations. So when you break it down, you will come down ultimately to China and India, and to some extent, to a lesser extent, Turkey as well. Turkey also has its own problems because its own currency, inflation have been an issue. So they also have to hedge against that as well. And the US, I know there will always be a question about the US, but US, first of all, has a very large reserve in gold as well. The US is the largest economy. It can also print dollars, which is actually the problem for the US and also problem for the rest of the world. It's also the reservoir at the same time of $29 trillion worth of US Treasury bonds. That's almost as much as the US GDP now. And these treasury bonds have been bought by the rest of the world because that's where central banks are parking their foreign exchange reserves. Remember again, foreign exchange reserves is not your surplus. It's not the surplus that your country has. It is what they hold in foreign exchange. They earn this foreign exchange against which the country issues local currency. So when the country buys this foreign exchange, or it comes to the country, then rupee is released under this. That's in the case of India. For example, if somebody, an NRI, sends $10,000 to their parents in India, those parents take those $10,000 to the bank. The bank gives them the money to spend, to buy a house, to refurbish a house, etc., etc. Whereas those $10,000 go to RBI. That is how these reserves are built. These are not government surpluses. I'm only saying it because I see many people saying, and also on social media, and I know many of these say it sincerely, oh, we've got $700 billion of reserves. Why don't we just spend it? You can't just spend it because in a way, you already spent that money or you already owe that money. I hope that makes things a little bit simpler over a tricky point. Now we come to where the pain point is. The pain point for sovereign governments and central banks is that now with Trump's arrival, although Trump promised the golden age of the American economy and American power, actually what's risen is not the American economy, but what's risen to peak glory is gold instead of the dollar. Dollar has been weakening and the American economy is also here and there. They have one quarter of some growth, 1 quarter of almost no growth. Gold has risen because everybody is insecure. Everybody is insecure, every country is insecure. So countries are building up, buying into gold or building up gold reserves. See, for example, what has Reserve Bank of India been doing? Reserve Bank of India, look at this chart. Look at this data. This is just a simple chart telling you how the Indian RBI gold holdings have moved. 2019, 618 tons. 2020, 658. So 40 tons of buying, it's a lot. 2021, 695. So another 37 tons of buying. Then we reach up to 2022 and it comes to 760 tons. So 65 tons of buying in that year. 2023 to 2020, and there is a reason, behind each of these spurts, which I will come to in a couple of minutes. In 2023, it adds another 34 tons. By March 2024, the aggregate comes to, or stockpile comes to 822 tons. But by December the same year, India adds another 54 tons, so it becomes 876 tons. So through 2024, RBI has been piling up gold reserves, and today it is in the second quarter of 2025, it is at 880 tons. That's the amount of gold the RBI has. Again, if you want to see percentage of gold holdings in RBI has usually been quite conservative. They've kept more of the reserves in what is more liquid and also probably gets some growth, because gold usually is not a growing asset. What is more liquid and what also yields more income in a way, those are treasuries, bonds. However, RBI also spreads it across currencies. It doesn't put everything in dollars, it's spread across currencies. A little bit of it is also in SDRs, special drawing rights. That's an instrument that the IMF sort of conjured up. It taking average of 5 dominant or convertible currencies in the world. India, RBI has its investments or its savings very well spread out. RBI actually does hedge, as you would expect, like all smart central banks do, and RBI is among the smartest of all. That's a fact proven through history. RBI doesn't keep, as we just told you, all their assets in one currency. However, see what's been happening there. Since 2021, from gold accounting for 5.8% of India's reserves, it has now become 10.3%. That's almost a doubling. That's almost a doubling of the gold's share of RBI's total reserves, even as the reserves have risen. So RBI is going for more and more gold. And since all of us like comparisons with China and India are the two big buyers, 5 years back, China held 1948 tons, India held 635 tons. Today, China has 2280 tons and India has 880 tons. That's why you have this 880 tons of gold stash now with the RBI. The other thing that's happened is, and that is something that many central banks have done. In the past, various central banks stored their gold in safe custody outside. So, say in London, many of those countries, including India, have brought this gold back because nobody trusts somebody else with holding your assets. Last year, India brought back more than 100 tons of gold physically, saying that now we have facilities to store this gold in India. We will store this someplace here. That's because, again, insecurities have come because of the Ukraine war and because of the US-led Western world, US-Europe-led move to seize Russian foreign exchange reserves up to about maybe a little bit more, over $300 billion. $300 billion or more than $300 billion worth of Russian reserves were seized by the Western powers, which keep on threatening to confiscate it and use it as reparations for Ukraine. Once that happened, then trust in US treasuries started declining. That, okay, it's my money, it's kept there in trust, but tomorrow for geopolitical reasons or geostrategic excuses, anybody can create a moral justification for this. They could trap it or they could give me trouble. Now, nobody can make an immediate shift also, because if you make an immediate shift, then gold prices will go up, and there are limits to what assets you can buy where you feel safe. So that is a dilemma. Central banks generally have been slowly but steadily moving towards gold across the world. Now, there is a mystique about gold. Everybody wants gold. Everybody also curses gold. So economists most of all curse gold because they see it as a dead asset. Also, investors, investment advisors over time have been saying, don't buy gold. Why are Indians buying so much gold when you can put your money in more productive avenues, or where you can put your money in more productive avenues, or where the money grows more? So go to mutual funds, take SIPs. However, this keeps changing and gold keeps making a comeback. Over the past year, we've seen a grand comeback. In the past 3 years, gold has doubled in its price. It's now got its sex appeal back so phenomenally that Tether, the world's biggest stablecoin company, Tether has now said that they are going to invest their surplus cash into gold mining. The chief executive, the CEO of Tether, actually said that gold is a natural Bitcoin. We'll come to that in a couple of minutes. In fact, if we go so far back as 1923, I'm telling you about economists and their view on gold. So we'll take you back as far as 1923 when John Maynard Keynes wrote a paper titled A Tract on Monetary Reform, in which he called gold as a barbarous relic and an ancient metal which had no relevance now. Then subsequently, even Thomas Edison, no less, in December 1921 said gold is a relic of Julius Caesar. Of course, he also said that interest is an invention of Satan. And people say interesting things. However, whenever there is a crisis in the world, gold becomes the currency of last resorts. What's been happening in the world with triple calamities, it's a triple hammer blow. And that is what has led this desperation to buy more gold. The first calamity was COVID. Economy is dried up across the world. Growth dried up. You didn't know where the world will go. In such insecurity, everybody goes to gold, and everybody did go to gold. So that's when the first burst came. That was the first blow. The next blow, the second blow came in Feb 2022, when Putin decided to invade Ukraine. He might have thought this will be over in a week, but it's now been going for more than 3 years, and there is no end in sight even now. And it has had all kinds of consequences, including the fears that global oil supply will come down at various points of time. And there is indeed the fear of confiscation. Right now, it's only been detained, it's been trapped, but confiscation of Russian reserves by the Western sovereign powers for use in Ukraine for reparations, or to pay for the weaponry that they now have to pay America for to transfer to Ukraine. Once that happened, once these fears arose, more and more countries thought that these are very uncertain times and maybe they will last for a very long time, so just go for gold. That's an Olympic-like statement. Like, this is not the Olympics, this is not about winning, this is covering all your bases. First hammer blow, COVID then. Second hammer blow, invasion of Ukraine. Third hammer blow came with the election of Donald Trump. And Donald Trump came in with this threat of tariffs and daily destabilization. Every day he put stuff on Truth Social, and with tariffs flying here and there, restrictions flying here and there, going to war with his own central bank, passing his big beautiful bill that will increase America's own borrowings, that has led to weakening of the dollar and the fear that inflation will be back in America. This is populism on steroids. That is not something anybody wants to take a chance with, because it's also the world's largest economy by far, by some distance. So this became the third blow of the hammer. That's the reason I said gold has been pushed up by this triple hammer blow. Trump is the latest, and we don't know what will come next. So once again, let's review what's happened since the second blow, Russia's invasion of Ukraine. Since then, in 3 years, gold prices have doubled. In fact, every time gold prices go to a landmark, the last was $3,000 an ounce. I don't know why they calculate this in ounces. An ounce is about 28.7 grams. So maybe what used to be 3 tolas in our old calculations, but we calculate the metric way in grams, kilos, tons, like that, and let's stick with that. Nevertheless, when it crossed 3,000, a lot of the experts said it can't go any further, it will start falling. It fell for a few days, and then it started going up again and reached 3,500. In fact, this year itself, in about 8 months, the gold price has gone up by 35%. So gold price now is around 3,500 an ounce. I will try to go metric a little bit, looking at least the Indian gold prices. Indian gold prices are now about 1,09,000, 10,000 per 10 grams, which makes it about 1.09 crores per kilo, or 1 crore 9 lakhs, or 1 crore 10 lakhs per kilo. The same price, remember, in 1999 globally, the same price in 1999 was $250 per ounce. In fact, it had fallen from its 1996 peak to 1999 by 40%. So gold can fall. The reason I mention this is because it's significant. It's significant because 1996 was the year until when gold formed a larger chunk of sovereign reserves than US Treasury bills. Since then, it's a double scissors graphic. Please see that. One going like this, one going like this. So it cuts in two places. That in 1996 was the first cut of the scissors. Then the gold fell below, or you can say US Treasuries started rising. So trust in the US Treasuries went up and gold wasn't going anywhere. It was seen as a sleeping asset, safe but sleeping. Now in 2025, this scissors has had marked its second cut. And the second cut is, see the graphic, second cut is where gold has taken its revenge. It's now back. So gold has gone above US Treasuries and is rising. And this accounts for overall central bank holdings across the world globally. So this is the first time this has happened since 1996, in nearly 30 years. There is also a survey by World Gold Council of 70 central bankers where 95% have said that the central banks' gold holdings will continue to rise. 95% out of 70 shows that maybe only 3 had a different view, and maybe we can guess who those 3 are, but I'd rather not go there. You can make your own guesses. At the same time, in the same survey, 3/4 of these central bankers polled, that is to say, about 53 of the 70 said that their dollar holdings, so dollar treasury, US treasury holdings will come down. And when US treasuries come down, usually gold will go up. It is as significant as that. Now we've seen some panic associated with dollar as well. Again, because of Trump-induced uncertainty. You want to see it in sheer numbers, and I have to take you back to 2021 when central banks held $4 trillion worth of treasury bonds. Now it is down to $3.5 trillion. That tells you a very important shift. And this number has come down while the overall reserves obviously have been rising. You've seen that in India as well. I see in a Financial Times article a good line on this from an analyst, Randy Smallwood. He is the chief executive of Wheaton Precious Metals, who said this is a back to the future moment. Back to the future moment because there was a time when gold ruled. Looks like the future is also going to be that. So in fact, the percentage, the tonnage of gold held right now by the central banks is back to where it was in 1965, 60 years ago. That's much before US treasuries came into fashion. 1965, the percentage of gold as to the total holdings of reserves by the countries was much higher. So today that percentage is not the same because then in 1965, most of the reserves were held in gold. Not now. Even today, most of the reserves are held in dollar, but the tonnage in gold has reached right now. Again, to understand this better, the overall size of the reserves has grown humongously since 1965. So there are absolutes and there are percentages. So in absolutes, the total tonnage of gold is higher than it was in 1965. In percentages, it is much lower than 1965. In fact, if you want to see gold's international price now, it is above it was in 1980 in real terms. 1980 was the historic peak. Once again, not in nominal terms, because real terms also mean in constant dollars, there is always inflation. It's also higher than that 1980 price. Now, some people say it may come down. Some people say it may never come down or may not come down in near future. But I see in Financial Times again, a good line yet again from Kenneth Rogoff, who is a well-known economist whose articles you read on Project Syndicate, makes a very good point usually. He says, people often say Bitcoin is the new gold. No, gold is the new gold. Rogoff also is a Bitcoin skeptic. He's also a former chief economist at the IMF. There are many other indications that you can look at. The inflows into gold exchange traded funds, ETFs. Sorry, the last time when I spoke in episode 1210, I had made the mistake of calling it exchange traded futures. No, not exchange traded futures, exchange traded funds. Up to May this year, in 5 months, 322.4 tons have gone into exchange traded funds. 45% of fund managers, however, think now that gold is overvalued, it may come down, but 55 don't. The sum total is and the conclusion is that the gold prices are going up because the central banks are buying. Families might be buying, businesses might be buying, I don't know, but central banks are buying, and central banks have enormous amounts of money. They can really move these markets. See this chart that tells you the relation between the increase in central bank buying and gold price. So this is primarily now driven by central banks, and everybody is taking a cue. But as that movement of a large amount of gold into exchange traded funds tells you that investors are also taking the cue and moving at least a part of their assets. Investors means HNIs, also corporates who might have large stores of reserves. They are moving at least a part of their assets that way. They may not be buying physical gold, but ETFs is not very different from buying physical gold, because whoever issues these bonds is also basing it on physical gold someplace. All investment advisors are saying 5%, 10% you should hedge. I'm not saying that. Investment advisors generally are saying that divert 5%, 10% to hedge, because there is uncertainty in global markets and domestic markets, because everybody is looking at tariffs, including India. So hedge it by moving some of your savings or assets into exchange traded funds. That movement is happening. It's all interlinked. And when the central banks go out and buy gold, or suddenly they dump gold, or they start buying US treasury, for example, if the opposite to what's happening now happens, that is an expression that is geopolitical as much as it's monetary and financial or economic. It is when the central banks start dumping something. In this case, slowly, they're not dumping, but slowly they are diluting their US treasuries and buying something else. They are buying that something as if on steroids, and that something is gold. When central banks do such a thing, central banks are acting on behalf of their sovereigns. On behalf of their sovereign nations, governments choose your preferred expression. When this happens, this isn't just a monetary statement. That is the language that central banks usually talk. This isn't just that. This is a statement of geopolitics. That is what is driving gold prices now. And this is what is persuading governments to push more and more money into buying assets in gold. Hold up a dollar bill, it always says, "In God we trust." So right now, the sovereigns, the central banks acting on their behalf, that means governments across the world are saying, in gold we trust.